Nick, it's great to be with you. I want to thank you for having your folks get back to me so quickly the other day when I had a question about BMG's announcement about seeking a new vault now that Scotia's getting out of the business. But you know, that's not Scotia's only problem. They're not only giving up the vaulting business. News reports say that Scotia's getting out of the metals trading business entirely after having been in it through its predecessor company since 1671. There's a lot of nervousness, I think, about Scotia getting out. They have admitted that they are negotiating with the U.S. Justice Department and the Commodity Futures Trading Commission to settle complaints that the government has about Scotia's trading business. That makes some of us nervous about their vaulting business, and I wanted to ask you if you could explain to whoever's watching here why you're very confident that BMG's metal is still safe in spite of the trouble that Scotia's having.
Well, I guess that takes a little bit going back. So first of all, let me give you an overview. When in the early days, it was probably 2004 or 5. Dave Wilson was the chairman of Scotia, and he happened to be a college friend and roommate of our in-house corporate lawyer. So we set up and we had a lunch on the 54th floor boardroom, the executive boardroom. It was very nice, lobster, the whole shooting match. And eventually I said to him, I said, you know, you guys seem to not really focus on the precious metals business, and it's going to be a growing business that you should really focus on. And he said, well, to tell the truth, the precious metals business that Scotia runs is like a drop in the ocean. It's insignificant to what we do. And I almost fell off my chair. But that was his comment. That comment is borne out by the fact that our original, we dealt with all the banks, and this is the investment side of the bank. Like, we did our deal with Scotia to buy and custody it, and then we went to the banks to recommend it to client RSP portfolios and so on. And that was the main thing that we did. Of the 4 Canadian banks, Scotia was the least cooperative. Okay, it was like pulling teeth with the investment guys. Okay, and this didn't just apply to us, because I talked to directors at Scotia that were trying to promote the GATA business to the wealth managers, and they said essentially we would set up a breakfast meeting. This is a director of Scotia that would go in and explain it to them, and nobody would show up for the meeting amongst the financial advisors. Okay. In contrast to that, you've got RBC, which has a very good attitude about precious metals, largely because of Tony Fell's a gold bug. Okay. So they're two opposite ends of the scale. So first of all, Scotia was never really sold on the business. But the way I understood the business developed for them is that they would go to mining companies that finished their exploration work and were ready to the next round of financing, which is to buy and implement the equipment. So instead of doing an equity issue, or instead of doing a debt issue, Scotia would say, look, we'll lend you the bullion. You sell the bullion, buy your equipment. It's going to cost you a point instead of whatever, 10 at the time. And that way you get your equipment. And all we want in return is that you process your sales through us. We'll buy at, spot, but all the sales from the mine come from us. And you repay the loans from production. So this was in a way like selling covered calls, which is totally legit, okay? But whether that...
Many developing companies have been hedging like that for a long time.
That's right. So that's a legit way in terms of leasing that you can go. But then what it morphed into, whether Scotia did it or not, I have no evidence either way. But the thing is that then it morphed into where instead of doing covered calls, you're doing naked calls. You would lend gold to a hedge fund that doesn't have any gold and can't get any gold. And what that did was it distorted the markets. It created artificial supply from people that could never pay it back physically. So there was a certain amount of that. I've talked to the Scotia people that we deal with, okay? And I didn't get any impression that anything unusual or illegal was going on. Now, what the reality of it was, though, is when you take our funds, for example, we buy the bullion from Scotia, and part of the deal had to be we sell it back to Scotia, so that the liquidity of our funds is the same as the bullion markets themselves. Okay, so that was part of the deal with Scotia. We'd buy from you. When we had a redemption, we would sell you. And each case it was done by formula. But when Scotia does that, and that was explained to me several times, is that if they buy long, they have to have a counterbalancing short position. So they would be potentially short on the COMEX while they're buying long over-the-counter physical. But you couldn't match up the two. So if you looked at the public stats, it would look like they were constantly short. Okay, but that applies to us. Now, the issue is that when, I don't know if you know, my background is in real estate. I was the manager of the investment division at A. LePage. And we set a new precedent there where we had securities licenses and real estate licenses. So I did deals sometimes as syndications, sometimes as real estate. So I would choose what the marketing thing was. And as a result, I sat through dozens and dozens of prospectus writing meetings with lawyers and everything. And, you know, a lot of it had to do with title. So when I set up the funds, I focused on that because nobody seemed to be focusing on that. That everybody's worried about what are the costs of storage. Well, why don't you first make sure you own the bullion? Okay, and the issue is to overly simplify that portion of it, because any tangible asset, the process is fundamentally the same. The vendor identifies the product he's selling in detail. So let's say a car is make, model, serial number, etc. Okay, and then the vendor also has to warrant that he owns it outright, has the legal ability to sell it and convey it, and there's no outstanding liabilities, right? That's how everything works, whether it's real estate, a car, a boat, a plane, it's all the same. Didn't apply that way to gold, okay? Now, it was different for me because I'm not from the gold business. I was from the real estate business, and I was inventing the gold business and the fund as I went along. So I said, okay, well, what do I need for gold? And we ended up creating the custody agreements because the ones that Scotia had were not acceptable to me. And I think we spent about $150,000 in legals creating the custody agreements. So we had it very clear in terms of what Scotia could and couldn't do in our case. So it doesn't mean that that is what Scotia did with all their other clients. But in our case, that's how it was. So there was no room for any hanky-panky or anything else. When we purchased bullion from them, which is almost daily, we would get a confirmation of trade, initially at a price per ounce. Then at the end of the day, Scotia would identify the bars they're going to deliver for that order. And as you know, London good delivery bars vary in size. So we call Scotia and say, okay, we have about 200,000 to spend today. What can you give? So what they did was they gave us a price that we would fix right away. At the end of the day, they would give us the bar details and say, okay, these are the bars we allocated. Some money would be left over, and that leftover money, which is a tiny fraction, is in unallocated form. Mm-hmm. So we have a float in unallocated form that gets converted as soon as we have enough for a bar. But at the same time, we only buy the bigger bar. So we have to wait till we get enough of 400 ounces. But at that point, we're sitting on short-term unallocated, but that is never more than 5% of the total assets. Okay, so that's how the system works for us. Every month, which is another thing that wasn't happening, is I wanted an officer of Scotia to give us a written report signed by them that says what's in storage and listing all the bars by refiner, serial number, exact weight, and exact purity. And if you go to our website, we have those lists. They change every month. Okay, and then twice a year, we inspected, verify that the lists they're giving us are in fact there, and so on.
Who does that? I mean, you actually see the metal yourself?
Yeah, I've been there many times. Marty handles it every year with the auditors, and it's usually a team of auditors come in, and they count everything, cross-check the serial numbers across these monthly receipts. So before we do the annual inspection, Scotia gives us the final thing signed by an officer. See, in the beginning, we'd get an Excel file that nobody was warranting that that's actually what you have. Okay, so I changed all that around because I've always had the philosophy that any deals that I did were good enough for me to buy. Okay, so this is for selfish reasons I did this, because I'm on our personal accounts invested in the fund and bars. Okay, so I wasn't going to screw myself in the process.
But where are Scotia's vaults that have BMG metal in it?
At 40 King in the basement. See, there was a thing a while ago where, forget his name, he had an article or something. He said, I went to Scotia and was shown a vault and it was empty. And I remember having interviews on Financial Sense with Jim Paplava. And I said, we're in the vault all the time, because not only do we go in to verify our holdings, when we're dealing with a major advisor or a family office or an institution, we invite them in the office, and Scotia has always accommodated us. We have to do some security clearance, and they have to file paperwork. They're not casing the place for criminal purposes. Once they do that, then we get permission to go to the vault.
So all your metal is in Toronto now?
40 King always has been.
Okay, but it's not in London. It's not anywhere else.
Oh, it always was there. Now, in terms of, we have two divisions. We have the mutual fund division, which is regulated by the Securities Commission. And then we also sell individual bars to high net worth investors. Now, for the individual bars, they're not regulated because they're not a security. I've carefully structured it so it's not a security. You're simply buying a bar of gold. You can choose to take delivery of it. You can choose to store it. You can store it with Scotia or Brinks. And with Brinks, you can store it in Toronto, Montreal, Calgary, Vancouver, Hong Kong, which isn't a great place these days, Singapore, Dubai, and Geneva. So through Brinks, we have that, and that's to accommodate international investors. So those are the two areas. So there's about 50 million with Brinks and 250 million with Scotia at this point.
All right, so you're confident all your metal is in the Scotia vault in Toronto. When's the last time anybody from BMG saw it?
Marty, you're going to answer that. It might have been the other day.
I was there on Tuesday with the client. He has substantial holdings with us. I was there with our custodial manager from BMG. She was there with me and the client's lawyer last Tuesday.
Well, that's pretty recent. I mean, the reason I'm giving you such a hard time about that is because of what Scotia is going through right now. I mean, it doesn't have anything to do with BMG.
Well,
but
like I say, this is my preamble, because the senior executives at Scotia are not on side about gold at all as a business. Never have been. And we couldn't figure that out. Like Scotia used to do 4 times the metal sales of all the banks combined. So that wasn't even a contest. Yet the executives at Scotia think this is a trivial business that's like a drop in the ocean. Maybe compared to the rest of Scotia business, it is. I don't know.
Yeah, well, to our people, it's not a trivial business, and you.
I know to everyone, and it will be less and less trivial, and as time goes on. I mean, I'm still a believer that what I've said in the book, it's going to be 10,000 an ounce, and I think we're easily going to hit 2,000 this year, and I think that notwithstanding the mainstream rhetoric of the economy starting up, I think it's going to start up, and whether COVID comes back or not, it's going to crash in the fall. And the crash in the fall is going to be caused by another real estate crash, only this time it's going to be commercial real estate. People are rethinking whether they need any office space. Retail doesn't make any sense anymore. Hotels don't make any sense anymore. And all that's going to have massive defaults, massive mortgage defaults that won't be recoverable. There'll be nobody standing by to buy real estate where the vacancy rate is so high that it's negative cash flow.
Well, the Federal Reserve might buy it.
Yeah, they're probably the only ones.
Everything. Now, listen, you've been really a hero of telling people that they've got to own allocated gold rather than unallocated gold. You've been for years telling people to stay away from paper gold. Now,
well, see that the thing, by the way, is I wrote an article about the ETF, and we've got various mechanisms that the gold price is manipulated. I'm fully on board with that. I'm just not sure Scotia is making a big impact. And it's clearly people like J.P. Morgan, Deutsche Bank, etc. Scotia is a small player in the manipulation, as far as I'm concerned. Could be wrong, but the issue that totally points this out, if you read, and surprise, surprise, is the authorized participant agreement for the GLD ETF isn't available on Edgar anymore. Can't find it. It was available when they launched it, okay, and we downloaded a copy of it, and that's the key ingredient, because the prospectus itself, and this is the anomaly, the prospectus isn't a regulated prospectus. Okay, it's still called a prospectus, but it shouldn't be. You can make up whatever the hell you want in an ETF prospectus. Okay, the first prospectus was 140 pages long. The renewal prospectus was 70 pages long. I can't do that with our funds. Okay, every time I renew it, I have to give the OSC a red line copy and tell them what I've changed. I can't leave half of it out. Okay, so that's the first step. The second step is when you read the authorized participant agreement, when the authorized participant is giving shares back to the ETF in order to redeem bullion, then the reps and warranties are as you expect, okay? That they own it and they have the right to convey them and blah, blah, blah. All that stuff is as you expect. But at a few pages over, when they're contributing bullion, that's not what it says. What it says is when I contribute bullion to the ETF as an authorized participant, when I finished contributing it to you, you will have a legal title. Well, wait a minute. Either you're conveying legal title or you're not. You can't have the purchaser warrant that he's going to have legal title.
Well, our side has always been skeptical of the ETFs because
but that's the mechanism. Okay.
Yeah, but they've been, controlled by the very biggest bullion banks. The HSBC is custodian of GLD, and JPM is custodian of SLV. They're also big traders in the market. And as you sensed, that the executives at Scotia were not gold bugs. I don't think the executives at HSBC and JPM are gold and silver bugs as well.
No, they're clearly not. But the issue is that, you see, people criticize our funds. They say, well, your funds have an MER of 1.5 and the GLD is 0.5. So I'm paying a lot for your funds. I say, yeah, but in our case, you own the bullion. Okay, you get what you pay for. And most people, I've only, in all the time I've been in business, I've only met one person, a portfolio manager from Dundee. I was sitting beside him at a Scotia dinner, and he's the only other person that read both the prospectus and the authorized participant agreement. And once you read both of those, you get the game. Now, the game is they borrow the gold from a central bank, contribute it to the ETF. The ETF gives them shares. They take the shares and they sell it to the public and keep all the money. It's not about management fees.
Well, they can, those shares can be shorted as well, increasing the supply. I suspect there's no way that gold at BMG can be shorted.
No, you can't. Legally, you can't short a mutual fund. See, and that was, again, getting back to the original objective, I wanted to, at the time in Canada, there was no way to hold bullion in a registered retirement account without compromising the attribute to bullion. So there was the central fund at the time. And if I had gone about setting another closed-end fund, I think I could have done it in about 90 days, okay? It would be relatively easy to do. But instead, it took 4 years. because to set up an open-end fund where we don't compromise the liquidity, where we trade in and out of the bullion markets, not how many shares trade a day, it had to be an open-end fund. We needed 6 exemptions. Every exemption took 50 grand worth of legal fees. That's simple. But that's what I wanted to get right. So when we had it, you could buy bullion in an RSP without compromising any of the attributes of bullion. So we don't have a portfolio manager. Nobody interferes with the decision. You decide when to buy it, when to sell it. We handle the process. No portfolio manager decides, oh, this is a time to short it or do whatever. And because as likely as not, he could be wrong in the case of gold. We don't market time, we don't lease, we don't hedge, we don't rebalance. Okay, so there's no interference with the gold. The gold is simply the gold, end of story.
Well, Scotia's not only your vault, as I understand it, it's also your broker. They're getting out of business. This has got to be a huge headache for you.
So that's a good question. There's 2 components of the Scotia relationship. One is to have a bullion dealer that we can buy and sell the gold back to, and so on. So we have those choices. And we can use several. We're not limited to any one entity to do that necessarily. So we're exploring that. The second side of it is a little more complicated because in a mutual fund, the only qualifying custodians are major banks that have at least 20 million in assets. Okay, so you have to meet the Ontario Securities Commission criteria for a custodian. So not like Brinks doesn't qualify, for example. Okay, to get Brinks to qualify, you need to get an exemption order from the OSC. So we're exploring, and we may separate those two elements because a number of people will qualify. But our other criteria that we've always had personally is that they be the vault, okay, needs to be an LBMA vault to maintain the chain of integrity.
Right.
Now there's a bunch of criticism about the LBMA and so on and so forth, but at least they're the industry association that sets the rules from mine to delivery to vault to maintain the chain of integrity. The example of not following LBMA rules is the recent 83 tons of gold-plated tungsten in China.
Copper.
Those weren't LBMA bars. Okay. Now, the LBMA thing, people dismiss it out of hand, but the thing is that I have business relationships with 3 other members for a minimum of 5 years each. So it's not just applying and filling in a form and becoming an LBMA member. Those 3 entities that you do business with have to sponsor you. So once you become an LBMA member, people are very careful not to lose that. Okay, because you probably won't get it back if they pull your registration. And they did that with a refiner in South America that was refining illegally mined gold.
Well, how much time do you have here with Scotia getting out of the business? I mean, you got to find a broker. You got to find a vault.
We've already been looking, having interviews, getting proposals. So, and we may end up separating the 2 functions, the buying and the storage, and deal with it. So that's being underway as soon as they made the announcement.
Well, how long will Scotia let you keep the metal in their basement?
I think at least till September, maybe year end. they're trying to either sell the vault or sublease it or something like that, which is another option, but they haven't come to grips with what those terms will be.
But then you'd want the new custodian to be an LBMA member, right?
Well, this is what we're checking legally. You see that I think the custodian could simply be a custodian that meets securities regulations, but the LBMA part of it needs to be an LBMA approved vault. So for example, Brinks is an LBMA member, so its vaults are LBMA approved, but it doesn't qualify as custodian. And it's not in the business of buying and selling bullion. So
Well, how
that's what
difficult it's going to be to get the Securities Commission to let you use Brinks if you want to?
there's already a precedent for that. But you would use Brinks as a sub-custodian. So for example, you could use one of the banks as, the OSC custodian. There's relatively little work that they do. It's the vault operator that does all the paperwork and provides the reports and everything to the custodian. So it's conceivable to separate it.
Are there many such vaults in the Toronto area?
No, I mean, you've got Brinks and the Mint. Both of them are LBMA vaults. And I think there's also an IDS vault. And there's another bank that says they're building a vault.
Well, you won't exactly then be totally disappointed to end your association with Scotia.
Well, and I guess I didn't need this extra hassle. Marty didn't need the extra hassle of replacing Scotia, because our relationship with them, I really have nothing to complain about. My complaint with Scotia is that we have never had any support. I mean, we paid them millions of dollars, and we haven't had any support from their investment side of the bank. I mean, we had our RBC's International Private Banking set up with us, 10 years ago. And Scotia was very prolific in the Caribbean and South America. Couldn't get those divisions to deal with our product. They couldn't even get meetings with them. Well, so it was a very strange dichotomy, and that's what I'm trying to do now, is that when we do a deal with whomever, that they act as, appropriately as the prime broker. If you're the prime broker for a hedge fund, they help you out with sales. They don't just say, here's our bill.
Well, what I was getting at was you may be glad to be doing business with somebody other than Scotia if next week there's an announcement that Scotia is paying $100 million to the CFTC and the Justice Department in fines for spoofing the gold market. I mean,
well, I think the 100 million is light because they've set aside 212 million.
Yeah, well, that's for shutting the whole business down. I don't know what this, any fines would be, but it's entirely plausible that Scotia will be fined. It's admitted that it's negotiating a settlement that implies, some kind of penalty there.
Right.
Look, that's why I'm giving you a hard time about it. The people associated with GATA want people to own their gold unencumbered, and they don't want them fooling around with the paper stuff, which is exactly what you've been saying for many, many years.
Well, and you see, the thing is, GATA is right, because what people don't realize is that the very first reasonable book I bought on the subject was Venerosa's Gold Book back in 1998. It was $900 for that book at the time, but it was really like a report. And what I remember the conclusion was that there was 8,000 tons of outstanding leases at the time. And then he updated that in something like 2002 to be, I think, something over 20,000 tons, which was more than half the central bank gold. Okay.
Right. And in, I believe it was the secret staff report of the International Monetary Fund of, I think it came out in March 1999, where the staff reported that the central banks did not want to distinguish gold in the vault from gold they were leasing out, because if that knowledge became public, the markets would know how much the central banks were intervening in the gold market.
Oh, so because here's the anomaly, and this is where you have to understand the legalities of leasing. So according to IMF rules for central banks, when a central bank leases the gold to the bullion bank, title to the gold remains with the central bank, even if the gold is melted down into jewelry. That's bizarre,
isn't it?
But that's the problem, okay? Because when you lease anything else, you lease a BMW, title to the BMW stays with the lessor. You get the right to use it, but you can't hand them back another BMW. It has to be that BMW. But that's not what applies to the gold business. So when the central banks lease gold, the bullion banks take it, sell it to China, melt it down in Switzerland and into kilo bars, never to return. Okay, that's the problem. But technically, when the central banks lease the gold that ends up in an ETF, that's why the wording in the authorized participant agreement is what it is. The central banks lease the gold, it ends up in the ETF. The central banks say they own it. The ETF says they own it, okay? If the authorized participant goes bankrupt, guess who's going to win? The central bank.
The other thing is, you know, you're talking about BMWs. You can probably find the BMW. The police will help you look for a stolen car, and
Right.
you can probably recover it. But leased gold, it can go anywhere and disappear anywhere, and you'll never see it again.
Right, but that's the ridiculous part of that is that you can't say that when I lease gold, I retain title. But that's what the central banks do. They've leased it all out. For all we know, they only might have 10,000 tons instead of 35, and they still keep it on their balance sheet as if it's their gold, even though it's melted down, made into jewelry, made into kilo bars, sent to China, and so on. What the real point of the shit hitting the fan is going to be is that when China announces that, by the way, we just transferred 5,000 tons of gold from the sovereign wealth fund to the central bank, and we now have more gold than the US has. When they do that, the question becomes, where the hell did they get the gold? Because both GFMS and CPM don't account for it. And I've had conversations with both of those people. I said, what are you going to do when China says they have 10,000 tons? Okay? Because the only place they could have got it was the leased gold that found their way through the bullion banks to them. That's the only place it could become, because they've accounted for everything else. When you read a supply-demand report from GPM or CPM, it accounts for everything, except for the gold that China's got.
Well,
Russia is relatively transparent. China isn't.
I've always said that the true location and disposition of government gold reserves are secrets far more sensitive than the location and disposition of nuclear weapons. And you'll never find out where everything is because it's a state secret.
Well, but at some point in time, both China and Russia have publicly stated that they're sick and tired of U.S. dollar as the reserve currency and the undue benefits that gives the U.S., and they intend to change that, and they intend to change it through gold. So they're both accumulating gold. China is going to not announce that they have more than the U.S. until they have what they want, because right now the opportunity to them is they can keep buying cheap. As soon as they announce that they've got 8,000 or 10,000 tons, the price of gold skyrockets, because then it becomes obvious that the U.S. hasn't. And then what happens to the dollar?
Well, it becomes obvious anyway that half the world is moving away from the dollar and toward gold because it's the only neutral potential reserve currency alternative to the dollar. What do you think of the gold industry in general in regard to this issue? Yesterday, I got a sneering email from a very prominent figure in the gold business, whose name everybody would recognize. He was responding to a GATA dispatch that I sent out the other day, and he quoted the aphorism attributed to Lincoln that you can fool some of the people some of the time and all the people all the time, but you can't fool all the people all the time. And he was accusing GATA of fooling people for 20 years with our complaint that central banks intervened surreptitiously in the gold market for policy purposes. Now, I wrote back to him very simply, thanking him for his note and asking him if I could quote him. By the end of the day, he had gotten back to me saying, no, he didn't want to be quoted, whereupon I wrote back to him and urged him to come out in public and to debate these issues, to debate the documentation we had collected, to review it with me, document by document, so we could explain how GATA has been fooling people. Are these documents, are these admissions that we've collected forgeries?
The issue is that if you study it, and one of my advantages I had in the beginning, because it took 4 years to negotiate with the Securities Commission, so I had the time to do the research, and I wasn't a gold expert at the time. I was a real estate expert, and I was doing the research and all that. And when you do the research, you can't come to any other conclusion other than the manipulation. The second thing is that you have to be incredibly naive to think that it's not manipulated. What do you think JP Morgan, Goldman Sachs, Deutsche Bank, and all these other guys do all day long? Okay, play the game by the rules? Hardly. Okay, people think, I've talked to people in terms of the ETF, they actually think that the authorized participant, even if they recognize there is one, goes to the market and buys physical bullion at net asset value, contributes it to the ETF at net asset value, gets shares at net asset value, and then sells those shares at net asset value to the public. I say, you've got to be kidding me. You have no clue about how Western finance works. They just wouldn't do that. There's no money in it. Okay? So it doesn't matter what the documentation is. You can tell that's not the way it works because there is no money in it. Okay? And the thing is that you look at the success of ETFs, and that's where the thing is, it does a good job of fooling most of the people, because most of the people are too lazy, too complacent to even read the prospectus, never mind the authorized participant agreement. And at some point in time, there's going to be a failure of an authorized participant, and the investors in the GLD will end up with a big goose egg. The gold was supposed to save your ass, not bury it.
Well, this is pretty radical. This is pretty radical talk from you. I mean, I certainly agree that all the evidence bears this out, but why do we have so much trouble getting the mining industry to acknowledge what's going on here?
Well, that's a good point, because when I started this, I thought as soon as I get the the thing, cleared and able to be sold, then I wrote a letter to all the CEOs of all the mining companies in Canada. And I said, okay, we've now got a fund that buys the stuff that you guys produce. Okay? There wasn't a single mining company that was supportive. All I wanted to do is have them notify their shareholders that, look, and now you can also buy the mine production in your RSPs. Most people don't have any money in the average person other than what's in an RSP. And
Well, I've never understood why they don't try to keep their cash balances in gold with an outfit like BMG or Gold Money. I mean,
that's what I do in BMG. All our working capital is in gold. Why would I do otherwise? But that's the level that they don't understand. When you consider why is it that they don't understand? So first of all, many of the miners have an attitude where I simply I go into the jungle, dig around, find gold, go back to Vancouver, raise some money, buy some big equipment, dig it up and sell it. That's the extent of it. And I said, well, you've got to be crazy. Why would you want to sell it? But none of them get that. They're in competition with the Federal Reserve. They're making real money while the Fed is printing bullshit. Okay. But there's a few mining guys like Rob McEwen, who's from the finance business. He understands what gold is. Tony Fell understands what gold, Eric Sprott does, etc. But most of them don't get it. They look in the jungle, find it, dig it up, and sell it.
I really suspect a lot of them know better, but that they're scared first of their governments because their governments don't want gold competing with government currencies, and they're scared secondly of their own banks. I mean, mining is.
You see, if a mining company sold only that amount of gold that they needed to meet costs, because it's cheaper to dig it up today than 10 years from now. So you just sell enough to cover operating costs and you keep the rest, okay? Then the rest builds up your balance sheet and your investors get to do a mining investment and a gold investment at the same time. And by doing that, you also reduce supply and increase the price. It's not magic, pretty straightforward.
Right. It takes gold away from the paper market where it gets hypothecated and rehypothecated. It's more right. Monetization. So they don't have to sell it.
They just sell enough to cover expenses, put the rest into storage. So then when you look at their balance sheet every year, particularly gold's averaged 10% a year since 2000 in US dollars. Okay. So you'd have a balance sheet that was growing at 10% a year. Okay. By just keeping the surplus gold. And you'd affect the gold price.
Have you had any connection with the World Gold Council?
So, well, I a long time ago did. I'm concerned the ETF is diametrically detrimental to everybody in the gold business.
Yeah, I've always thought that they were on the other side.
It has suppressed the prices. Yeah, they are. And the issue is that when you look through the documents, and again, this goes back to the fact that I've sat through dozens and dozens of prospectus drafting meetings with the top law firms in the country. The material that was drafted was particularly well drafted to obscure what goes on. The wording is very careful. They say the ETF is designed to track the gold price. It doesn't say the ETF is about owning the gold price or owning gold. It's to track the gold price. And I've always said, well, if you want something to track the gold price, you don't need any gold at all. You and I can have a bet on the gold price in August, okay? We don't need any gold. If you lose the bet, I need to be confident that you can pay, and vice versa. But we don't need any gold. That's essentially what it is.
Yeah. Well, it's not the mechanism I would have hoped that a true World Gold Council would would set up. I've always thought the World Gold Council exists to make sure there never is a World Gold Council.
Well, you see, the thing is that they get their revenues from the mining companies, right? So all the mining companies have to pay into the World Gold Council, and then they use something that's diametrically opposite to the best interest of the miners.
Yeah. So why do the miners keep doing it? Barrick, Newmont, they're still
they don't
members.
understand gold, and the biggest guys, they're just trucking along. But like I say, there's very few miners that get what gold is. And I'm about to write an article on because this has been frustrating me for 20 years. I couldn't figure out why people are that stupid or that obtuse or whatever. But here's the reality, is that in the investment world, the average age of the portfolio manager is 50 years old. That means he started in the business in the 90s. He's coming off a 20-year bear market in gold. It was flat from 1980 to 2002. So it wasn't exactly on his radar when he started into the business in the 90s. So they ignored it. There also isn't a single university that teaches about money or gold other than the Mises Institute. And none of the investment courses, whether they're the securities course or the CPM courses or any of that, even mention the word gold, okay? But gold's at least an asset class that should be recognized as an investment asset class. It's not a nothing, okay? But it's ignored as if it's a nothing.
Well, it's we believe it's the secret knowledge of the financial universe that everything is based on gold.
You're exactly right. You see, and the thing, the way you make money in the investment business, which is obvious, is you find some knowledge that isn't in the public domain, and you capitalize on it and you benefit accordingly. Once it becomes public and so on, then it becomes an also ran. So in one respect, it's still a huge advantage for people to spend the time to educate themselves. But it's an uphill grind, whether it's pension fund managers, portfolio managers, retail advisors, anybody. When we look at our funds, we have two categories. One is the bullion bars, which are either gold bugs or close to gold bugs, okay? They all get it. They understand all the stuff we're talking about. And in our bullion bars program, there's been very little in the way of redemptions. We have Class D, which in the funds is for people that do their own investment. They don't use an advisor, so the management fees are reduced by the amount we normally pay in trailers, and they make their own decisions to buy stuff. So in Class D, again, we've had growing sales, no redemptions. In the advisor-based side of the business, our sales are just treading water with redemptions at this point in time. Now, I think at this point in time, there's a lot of people that have to liquidate investments just because they need the money. But that's where we get our liquidations from.
Well, I'll blame one more institution here for the public's ignorance, and that's the financial press. We find it very difficult to find any financial news organization that is willing to put a critical question to a central bank or a bullion bank or a regulatory agency. And today, I think that's the biggest power of central bank policy in suppressing gold, is that the financial press will not examine the issue. You know, there's two questions that any financial news organization could put to a government agency today that would explode the whole scheme. And they're questions for the U.S. Commodity Futures Trading Commission that GATA has put to the commission and that Representative Alex Mooney from West Virginia has put to the commission. Commission refuses to answer. And those questions are, first, does the commission have jurisdiction over manipulative futures trading by the U.S. government or any broker acting for the U.S. government? And second, is the commission aware of any futures trading by the U.S. government or other governments? Those questions the commission refuses to answer. Now, very easy for the Financial Times, the New York Times, you know, the Globe and Mail, National Post, just call up the CFTC, ask for the chairman, and put those questions to him. And when he refuses to say whether they're aware of surreptitious futures trading by the U.S. government or other governments, and whether the commission has jurisdiction over manipulative trading by the government, or whether manipulative trading by the government is authorized by the Gold Reserve Act of 1934, then the game blows up. But the financial press won't do it.
No, I don't see them doing that. I think they'll only report on that when it has blown up, and then it'll be utter voluntary chaos on every front.
Well, but when a government agency will not answer simple questions like that for a member of Congress, you know, I think if you're a financial journalist, your antenna should start twitching a little bit, and they don't want to know about it.
No, that's right. That's right. So that's where it's an uphill battle. The bottom line is a few people that get it, that are astute enough to have done the research and understand gold, are going to do extremely well. And the rest of the people are going to have their clocks cleaned in the next go-round.
Well, I wouldn't want to be invested in any bank that has any real estate loans, as you
well, they all do. Yeah.
At the start,
the problem is already happening. Like there's too much retail has been built, and a bunch of Mickey Mouse franchises fill the retail outlets, right? And those are the ones going under now, or will go under once they go back to work and attempt to make it. And it does work. Shopping center, if he has 2 vacancies out of 10, he's losing money. And not only is he losing money, but there are no replacement tenants who will be in place for years and years.
Yeah, it's going to be very hard times for a while here. It's going to require a lot of money creation, and I hope that at some point people will notice the ratio between that money and the amount of real metal in the vault somewhere.
Well, unfortunately, this story has repeated many times before, and we're just going to do it again.
Well, I appreciate the work you're doing to alert people about the difference between real metal and derivative metal. I wish you the best in finding a successor broker involved with Scotia, and I hope Scotia doesn't get in trouble formally before you disconnect from them. And I hope we can talk again like this sometime in the future.
By all means. I trust the system works. I don't think we'll have anything coming out of that for years to begin with, but it eventually will come out. And Scotia pile, we shall see.
Well,
but in the meantime, everybody's missing the fact that gold is rising. So gold has actually done very well, given that at the same time, when you compare this year particularly, gold's the best performing investment of anything. Nothing is even close. Everything's negative.
It's been outperforming the stock market for some time, but again, that's a prohibited subject in the mainstream media.
Yeah, I'm doing an article that's going to talk about, you know, when you come to not 5 or 10% of your portfolio in gold, start with 100. That's your real money.
Well, you're preaching to
so
the
now
choir.
when you have 100% of gold in a vault, is it worth taking any of it out to invest in something else? Because the question is, will I get more gold back than I put in? And the answer, since 2000, in most cases, is no. So the point is that it's not worth investing the gold into anything else. Just keep it in the vault. And you're going to get 10% return. The pension funds target at 6%. Many of them don't get 6%. They could have just bought gold.
Well, a lot of us could have just held more physical metal and fewer mining shares over the last 20 years. I'm hoping that the mining shares will pick up as time goes on here, and the mystery is made clear to people.
Well, the mining shares that we've looked at is a bit of an anomaly. Is gold and mining shares on a normal day is correlated, and so anyways, the opportunity in mining shares is that equity market correction, even if the price of gold is rising. Okay, because when you look correlated to gold, but in an equity market decline, they become correlated to equities. And the reason for that is because they're thinly traded. All the mining shares in the world, the market cap is less than Microsoft. Any kind of sales pressure, they get hammered. But it creates an enormous opportunity at the bottom. Okay, and that's the thing. So you hold gold first, and then at a bottom, that's when it makes sense to take the gold out of the vault and buy the mining shares, or some.
Well, I hope we're there now or soon.
Yeah, we shall see. Well, it was great talking to you, Chris, and we should do this once in a while. Stay in touch.
I'd be delighted, and I want to thank you guys for helping me technically in arranging this over the last couple of weeks.
Now, I think Monica has sent my article on the ETFs to either to you or Bill. But
did it just come out, or was it the one from 3 or 4 weeks ago?
Yeah, 3 weeks ago.
Yeah, we dispatched that very quickly. I think really the very day that I got it. It's really why I wanted to bring up that as an example.
Hopefully a lot of the mining CEOs will read it and see how they're getting screwed by the World Gold Council.
Well, I'm not impressed with their courage. I'm not popular in that crowd, so.
Okay.
But you can't be that much more popular with them.
No, I'm not popular because well, I do mining investing, but I do it once clearly everything's bottomed and so on. So right now, personally, I'm just holding physical gold. Mm-hmm. And our funds in the RSP accounts.
Well, stay well. Please keep up the fight, and good luck with your new broker and your new vault. And please make sure somebody sends me the release when you got something to say.
Okay, great. Thanks, Chris. Good talking to you.
Thank you, Nick.